to my YouTube channel. Today we are going to talk about mortgages and interest. There are many types of mortgages, but today mainly we are going to focus on buy-to-let and residential. Before we dive into this topic, let me tell you some statistic. According to uswitch.com mortgage statistic. According to mortgage statistic, the majority of households, 64% in the UK, are owner-occupied, which means either owning a home outright or owning a home with a mortgage. This equates to an estimated 24.7 million households. In 2020, approximately 8.8 million, 36% were owned outright, with 6.8 million, 28% owned with a mortgage or a loan. The distribution of all owner-occupied households in the UK does, however, vary significantly between age groups how their properties were purchased. The data shows that those in the older age brackets are more likely to purchase a property outright compared to those in the younger brackets. Younger brackets will have to go to the bank and apply for a mortgage, and bank does some checks on their affordability and offer a loan with the interest rate attached to it. Loan interest is one of the main sources of income for most of the major banks in the UK that lends money to purchase a property. In the UK, interest rate and economic policy decisions are set by the Bank of England, who is responsible for controlling the economy and monetary policy decision making. In the USA, Federal Reserve are responsible for the economic policy. The recent economic crisis and the uncertainty created higher inflation around the world. To control the inflation in the UK, Bank of England have raised the interest rate to 4.25%. That led banks to raise their interest on any mortgage applications. If you would like to know more statistics, I shall update the link below. Please have a read. Please visit uswitch.com mortgage statistic. Okay, now let's discuss residential mortgage. Everyone dreams of owning their own home, and they want to work hard and want to be on the property ladder and purchase a property that they can call home. But it is easy if you have a good credit history and higher income, or if you are a multi-millionaire or billionaire. You don't have to worry about loan or interest. If you are one of the people, you will not be watching this video right now. The recent economic condition and the monetary policy changes led to the recent hike in interest rate by high street banks. The interest rate you pay on a mortgage doubled. If you were paying £1,000 previously as an interest, now you will have, if you take out a new mortgage loan, the interest rate is double. The amount you will pay will be £2,000, so £1,000 less in your pocket. Let me illustrate with a calculation for residential mortgage. Let's say you are taking out a residential mortgage for 25 years, which is 300 months. The property price is 112,500, and if you put on 11% deposit, which is £12,500, so you are taking out a loan mortgage on 100,000, and the bank is attaching 3% loan, which is annually you will pay £3,000 interest only, and over the 25 years you will pay interest only 75,000. And then if you divided that 75,000 by 300, you will get £250 interest only monthly. Your interest cost will be £250 a month. And monthly overall repayment, if you are on a residential mortgage, and then if you are paying the capital and the interest, it will be 75,000 interest plus the capital that you took out, 100,000 divided by 300, you will be paying £583 as a capital repayment, including the interest. And then recently inflation skyrocketed, and the Bank of England raised the interest rate. The interest rate offered by the most of the bank for a mortgage loan is 6 to 7%. Let's stick with 6%. It's a similar scenario. Let's say you are taking out the same mortgage on a residential mortgage for 25 years and 112. If you put on 11% deposit, which is £12,500, mortgage loan is 100,000, and then now the interest rate is 6%, and then annual cost will be 6,000, which is previously we looked at it 3,000. Now you are paying 6,000, which is double, and over 25 years, 6,000 times by 20, 150,000. So over the 25 years, you were paying previously 75,000 as an interest, now is 150,000. So it's doubled. So on a monthly interest alone is £500, from 250 to £500. And the monthly repayment over 25 years, including capital, it will be 150,000 the interest plus the capital 100,000 divided by 300. You will be paying £833 a month for your house. You see, the interest portion is way higher than the capital repayment in this scenario. Only a £333 gets paid towards your capital. Similar scenario, but now let's look at the how buy-to-let mortgage interest work. Many people only pay interest on a buy-to-let. They don't usually pay the capital, as they leave the asset to appreciate in value and remortgage and pull out some cash to buy another property. So now we are just going to look at how much interest will cost each month. Let's say in this scenario, mortgage term is 25 years, which is 300 months, and the property price is 100,000. Deposit is 25% recovered by the default for buy-to-let property 25,000, and mortgage loan is 75,000, and the mortgage interest is 6%, which is annually 4,500 pound, and monthly interest will be 375 pounds. So total interest over 25 years, you will pay 375 times 300, 112,500. In this case, you only pay interest. Your capital will not be repaid unless you choose the option to pay the capital as well as interest. So if you pay together, your capital will be reduced, but if you only pay the interest, your capital remain the same, 75,000. And then if you remortgage this property and then your house price goes up, the bank might give you some cash to get out the cash and use the cash to buy another property. I hope this video explains the basic principle on how these two mortgages work. If you think this video is useful, press the like button and subscribe to my YouTube channel. Thank you.